oil could continue to the upside, which it did. Got a big up in oil today. That's helping the S&Ps. If you recall, a week ago I said I don't think that the S&Ps are going to wash out, that we could have some recovery up towards this 1980 with 61.8 level. If you look at this just being a rectangle, we're on the verge of breaking out of 140 handle formation to take you up to 2080, which would almost be new highs. I'm viewing this action in both the S&Ps and the dollar as potentially setups for sells. Give me why if you're with me. You recall when everyone's calling for the end of the world, I said that's when we were shorting the euro up near the 114 range. Euro came back down, dollar rallied, S&Ps rallied. So I see nothing. Maybe a turnaround Tuesday happens in the next couple of days and we begin to turn back down to the downside. You know that I talked about in the Dixie, the breakdown was 98.50. Can't give it an all clear until we got up above 98.5 and closed above it. So the dollar was a great buy down here when we were shorting the euro. Not as much of a great buy up here. In fact, I talked about that we could rally up here towards 97.5, 98. Last week I thought we'd get a pullback first before this would occur. We had this little reversal mainly due to the EU saying there wouldn't be a Brexit. So my forecasts have kept you short the pound from that 146, 147 level. We almost got to 40.25 today. So that was about a 600 pip call, being short the pound. I'm not ready to get aggressively short the dollar, and you guys will see why based upon the RSI pattern that I have developing here. Both the euro and the pound did confirm the recent new low. Although the pound's acting a little better than the euro in the last few hours, it's still the relative weakness. Give me a why if you're with me. Here's a quick look at the crude oil market. What's a little bit surprising to me in the crude oil market is that Canada has not taken out the recent low. In fact, it's trying to dig in its heels for a higher low here. So it should have, based upon what crude's doing, made a new low already. Let's just take a look at the CL. Let's make it April. And we'll go daily nearest, take out futures premiums. So here you are, big move in crude, right? After that crummy close, we were talking about it here. I thought there might be a third drive to the bottom. Looks like it's taking off here. 38 isn't looking as unlikely anymore. You would think that would pressure the Canadian to the downside. So most likely Canada's going to try 34, 32, unless crude just stalls here and we head down one more time. Tougher call here than it was down here, just like the dollar. I can't just launch crude. I was buying it down here, actually took some profits here Thursday before this. Wasn't a great close, and then here you go back up to the upside. Take a quick look at what's happening in treasuries. And you would think with a day like this, Dow up a few hundred, S&P's continuing to run, that the bond market would be under low pressure. Let's take a look here. I was right about the US dollar yen pulling back towards 112 area. That's happened. Now the question is, can it dig in its heels, or are we going to plunge to new lows? Again, tougher calls this week than the last few. Only major news event, major driving news is going to be GDP in the US on Friday. So we have the S&Ps going up and bonds maybe going down in ABC. So perhaps the yen isn't going to flush right away down towards that 105 level that a lot of the bears are talking about. And finally, let's look at the gold. The gold looks vulnerable. to me, you know, maybe it tries another high, but I think there could be a pretty good correction. In fact, I am surprised there hasn't been more of a correction. There's been 60 bucks in gold from the high, with the S&Ps heading up. And remember, I talked about the potential of you can't rule out the S&P squeaking out a new high, but you just take 1260 to 1200, that would give you 1140. But these markets are tough. You get these initial ranges and you get some formation, so we could have A, B, C, D, one more up, maybe even a new high. But as far as I'm concerned, I'm waiting to be a buyer down here around the 1120 to 1080 level, possibly going into the April time frame. So I'm not going to chase the Aussie up here, although it has surprised me to the upside. Give me a Y if you're with me on all the outside markets. And how I correlate oil with the Canadian, gold with the Aussie, US dollar yen with S&Ps and treasuries. Everyone with me? So I was talking earlier in the day to traders and saying that, you know, today I came in with a lot of, not a lot of ideas, and it's okay that there are time frames that you don't know what to do. That means that you have to overcome FOMO, which is fear of missing out, because you don't have to be afraid of missing anything, because you're always going to miss trades. And the good news is there's always another trade around the corner. Also, if you come in fatigued to your trading session, your performance is going to be affected. So you have to feel sharp in a performing state and also have the ahead of time so that you can act instead of coming in all clouded up or foggy and then starting up your platform and saying, okay, I need to find a trade. That's not what you need to do. What you need to do is have a plan and have reasons and contingencies. We're taking trades, and if you're not up to par, you have the flu, you have something like that, it's okay not to trade. I guarantee you the markets aren't going to shut down, not yet. The game will continue, and not to try and force things when you're not feeling great. Give me a Y if you understand it. Give me a Y if you've forced trades, either because of fear of missing out, analyzing on the fly, or not feeling great physically, and yet still saying, well, I need to find a trade. So if you hear yourself saying, I need to find a trade, you need to delete that from your software, because if you just are patient, you won't have to find a trade will find you. Give me a Y if you understand. So I find myself sharing my views on market psychology, and the only reason I can talk about these things is I've seen hundreds upon hundreds of traders, or I've seen these things in myself and my own trading. And if I can help you avoid landmines, because although it doesn't show up in your account, avoiding bad trades is even more important than a good trade and a winning trade. Doesn't show up in your balance because you didn't do the trade, but avoiding the bad trades is significant, even more significant than a winning trade is. So that's why I say that don't say you need a trade, because you want to plan a trade. You want to let the trade come to you. You'll start to see your technical evidence begin to build for you to be compelled to take risks. In fact, less is more. Give me a Y if you're with me. And with that, we'll begin to go to our individual instruments. Here we go. We always start with Euro USD. So here we are. Last week I talked about we had two daily support levels. And remember our 1, 2, 3 to a dry bottom. I was recommending covering here because we went to that 1080 level. Only held it for a day. So I said that I drew this trend line last week, and I said there was potential for a test of this trend line of 109.35, 109.40, and I do have a belief that we could get there. Also have a 50-day moving on the daily at 109.70, and this is why I think that even though we could rally back maybe, and I do think it's possible we could rally back to old support as new resistance. Here you go. Here was this 1080 level. And there was a good scalp when we did a stop hunt underneath it. Oh, right here. So it is possible that we make a move up towards 110.80, 112. But for those of you that have been following my work here on RoboForex, I think 2.5 years or so now, what I teach in the RSI is although you could have counter trend rallies when price and momentum confirm, and that's a pretty negative rating of 1760 here on the RSI, that markets rarely bottom when markets are confirming the low, just like they rarely top when markets are confirming the high with momentum indicators. My momentum indicator of choice is the RSI 14-day period. So to me, this is implying both on the 1 hour, maybe not as much so on the 4. It is holding a little divergence, that we could rally here first and then revisit it again. But I would no longer be short because this could turn out to be a very key significant support level. This 109.80 level. This was your first support level, the previous high several trading days after Draghi. But this was the other one where I said that there could be stop hunts above this 109.80 level right here. So here we are, we're almost there. Some confluence. So I would actually like to see the euro bounce here. And then I'd be interested in some type of retest of the low. But even though we're confirming, I'm not saying be long. Maybe you have some short-term divergences on the 15-minute, which it seems like you do. And here again, this points up towards, 1060. Maybe really gets maybe 111. So that to me looks like the projected place. I don't want to start getting short at what could turn out to be major support, maybe even uptrend support level in the dollar index, because let's keep in mind that the breakout under 98.50 is still in force. So this is the obvious uptrend channel here. And I have confluence here at 109.40. So an ideal scenario for me would be to have some type of pop here. Take this market back out of oversold territory, old support, new resistance, maybe up around 110.80, 111, and then have another sell-off or retest back down to new lows and have the RSI stay above 30. Give me a Y if you're with me. And understand the reason that I'm open to the euro rallying here, but I believe it's going to be more of a low than the low for a move back towards the highs, or for the bullish case, or even a big fib retrace from 113.80, that bigger retrace or a move to the upside happens from under today's lows because of the confirmation of the RSI, because we're into some major support. So I would think that there's going to be some type of bounce. I have confluence intersecting lines around 109.40 to 109.70. So if you want to trade it, I wouldn't look for more than 110.70 on anything counter trend in the euro, and then I'd be looking for one more low. So we need to take this above 30, get some type of rally, and then one more flush to take out, make new price lows, and have higher momentum lows going forward. Give me a Y if you're with me on my analysis of the Euro USD. So I'm saying this because Euro Pound still has not broken down. It's moving sideways. I think as long as we hold this 77 level in Euro Pound, that there still could be a shot for another high. Nothing here signifies a top. If we get through today's highs, we can make this move up towards this top breakdown line. I have a lot of confluence coming up here around the 80 to 80 and a half level. And this may be a time to favor cable, but not yet. So cable was a big call over the last couple of weeks. Every rally I said sell. We diagnosed it correctly here and down here. This was the news of that the EU may have come up with a compromise deal to avoid the Brexit. And here we are testing the 140 level, which was a target objective I talked about when we were in here, that we were going to take out these lows we have. There is some decent divergence in the pound down here on the daily, holding above 30 on the 4 hour. So I don't think I'd be short the pound yet. Maybe we get a rally back to, like I said, previous support, just like in the euro, could be new resistance. So we have this level right here, 143 should be line in the sand for the bear case. I think that the pound could recover there. That's going to be pretty important. Right here. About 42.5 to 43. I would say the first sign that there's something more going on than a bear market rally in the pound would be closes over 142.43. And in the euro, we start closing much above 110.780. That perhaps there's much more left in it to 112. So you have some significant old support, new resistance areas for potential targets, and they're not going to change the trends until we close back above 110.80 in euro and 142.5 or so in pound dollar. Give me a Y if you're with me on that. So dollar could pull back, but as you can see, even on the 1 hour here in the pound, there's no divergence, just like in the euro 1 hour, no divergence. So I need divergences. I'm not saying it works all the time, but I'm better off following my rules, and when I'm bottom picking, looking for a change in direction, I need momentum to start not confirming instead of confirming, like it is here. And like it is here. So the ideal setup is that we take these markets out of oversold condition, we revisit, test, take out these lows, and the RSI, instead of trading under 30, begins to hold above the 30 level. Give me a Y if you're with me on our coverage so far of the euro, USD, and pound dollar. So this was something I got right. Where we go from here is a little cloudy for me. I know that a lot of people are still looking for 105 and lower levels in the pound, US dollar, yen. And really, with the kind of move we're having in equities, the yen isn't doing much. Up here, I said I thought we should get some type of pullback towards 112. 112.30 was the low. So if you took this trade, you made some pips. To me, it's a coin toss here. This was a confirmed low. So it's an I don't know for me right now. Maybe up here around 113.50, 113.60 might be worth a try. Again, seems like when you have, old support, new resistance lines happening in one instrument, they seem to start showing up everywhere. So this was a pretty key level right here. So we also have a 200-day coming in here right around 113.50. So that, considering the rally we've had in the S&Ps in a week, which was huge, that if you are a bear, and there's plenty of reasons for being a bear in the yen, because just this formation right here, 116, 125 measures at least 110 and possibly 105. You know, I talked about these targets when we saw this right shoulder developing. Okay, so plenty of reason to be negative on US dollar yen, so perhaps some type of rally back to 13.5. For me, it would be more ideal looking at rallies back towards 116. Now maybe this is A and this is B, and then we get a C back to the breakdown. That would be much more of an attractive intermediate term short for me. But if you're a 1 hour scalper, perhaps at this resistance level around 113, 113.50, 60 might be a time to consider attempting a short position in US dollar yen. Give me a Y if you're with me. So we're real bearish the crosses, and 125 was a long talked about target in Euro yen. You know, and we talked about it here, and we talked about it here, and then we even caught one more shot when I said look to be a seller around 130 on a recovery, and we had that. And I wanted to see 125. We're now under 125. There's still not a lot of reasons, starting to get a little divergence. I wouldn't be short anymore, even though the 1 hour is 1 hour is diverging, unlike the euro yen is. 4 hour euro yen is. So I'd actually be looking for some type of recovery here in the crosses. The strength turned out to be Aussie yen, which I think has a chance to really make a move, maybe back towards this 86 level. But again, I don't chase. So maybe we get another pullback in Aussie yen, pull back, get up towards 82.25 and rally back towards these, pull back towards 81 or 80.5. But this is looking like we're going to get back and retest the highs. So the Aussie, which did surprise me, is a strength. So Aussie yen is going to be the preferred long on pullbacks. Guppy is an interesting daily here. We have a potential third drive to a bottom, although the third drive line does come in lower. There you go. And remember, we were bearish from here. We were bearish up here. We covered at the 60 level, covered half here. So been on the right side of things. I don't want to give it back by bottom picking, but it's starting to look pretty interesting for a potential recovery. We do have some divergence here on the daily. Here's drive 1 confirmed. Here's drive 2 diverging. And here's our third lower low, and it's about equal to this on a 4 hour time frame. Looks like it's trying to recover here and diverging. So I think that these crosses are in a recovery phase. Can't rule out another push down towards 57.30 or so to complete the third drive on the daily. But again, the crosses, all of them, not confirming lows like the pound and the euro yen. Give me a Y if you're with me. So I want to see it do a little bit more work. Although we're diverging here, I'm not ready to just jump on it. Daily, it's still not a reversal day, but getting closer. So looking to buy a pullback in Aussie yen, possibly back towards this 81 level. And eventually I think we could head up and take out these highs above 82, but this could put in maybe some type of head and shoulders bottom, with this being the neckline, and we get some type of pullback. This could be a left shoulder, this could be the head, and we get some type of right shoulder. I'd be interested in looking at the Aussie 81 to 80.75 on the downside. Not sure I want to short it. Why? Because it's confirming the highs, isn't it? New highs, new confirmation, even on the 4 hour, took out the previous peaks. So Aussie yen, the leader. Don't want to press the short side of the yen crosses right here. Give me a Y if you're with me. Moving on to the commodity currency. So with that big update that we had in Crude, I showed you earlier. Canada has not made a new low yet. Looks like it could. Maybe we get some type of three drive formation here. But actually Canada holding up well considering the crude strength. If crude really begins to rock and roll, and there's a lot of tension between Turkey and Russia right now. And I do believe that oil producers such as Russia would love to see this crude rally continue and get above the 38 to 40 level. Now, I have a hard time getting short Canada here. See, it's one of those sessions. Just launching shorts here in Canada. Hard for me to do. And getting long Canada right here in case crude does rally is hard for me to do. So the way I see Canada, maybe we do push to new lows, 34 to 32. So I'm an interested buyer in Canada, maybe at the 34 to 32 level. Down here, 32 I've been talking about. Or I'm an interested seller up around the 141 level, back up here at some type of, that maybe this was an A, and we're setting up some type of B. Sometimes Bs can take out previous lows. They're called their regular Bs. And then we get a recovery like this in Canada. So I would lean more towards looking for a buy. And I'm interested in being a seller back at this 41 to 42 level in USD CAD. Kiwi back at some major resistance. Looks good though, I can't fade it. Similar situation with Aussie, so you know this, I thought we were going to pull back to the 69 level when we were here. And in that, I thought we'd get back to this line. I'm not going to get long and just launch in Aussie, and I'm not going to top pick it either. So we're in one of those time zones where I'm not going to pretend to have a lot of conviction if the charts tell me not to have it. I'm not here to entertain you. I'm here to share my views that I take very seriously because people put their own capital on these ideas many times, and if I could be right big for 2-3 weeks at a time, if the setups aren't there, I'm not going to fabricate them. So basically that's the view in the euro. I think we could get a rally back towards this. A lot of people are saying this is going to be a major low. They could be right, but my RSI work is saying, yeah, look for a rally, but maybe a retest of the low several days down the road. And I think that 110.70 is a reasonable target if you're long here. Similar setup in the pound up around 42.40, another 80-90 pips higher. And closes back above these levels will tell you something else is going on. Give me a Y if you're with me. Also, do not press the short side of these crosses. I don't know if you want to get aggressively long. There could be bounces here. We are diverging on the crosses in both the euro yen and the guppy. So be careful. We did very well on this wave. Okay. And we're retesting this, and I said I'd love to see 125 again in euro yen, and we got it, even took it out. So this is not an area I want to stay short euro yen. I want to see what the first rally, then pullbacks look like on all of these things. Any questions on anything I've covered today? Again, thinking the dollar could be getting closer to completing this rally. I'm not looking for it to take out 98.50 right away. Right? We bought the dollar last week, stayed short the pound. You may even want to cover the pound and look for some type of, like I said, reshorting of the pound. Back up against this line, back to 42.40 to 43. Stops over this. I have stops over this event of avoiding the Brexit. Any questions on anything I've covered today? Or any questions on any instrument or pair I haven't discussed? Okay, good hunting. I'll be back with you Wednesday. Thank you very much for your attention. See all my trading warrior brothers and sisters Wednesday. Good hunting.